Welcome to Drill Down Earnings. We have quarterly results out from Elastic. It's one of the 50 most important companies in technology, and that's what we cover here at Epistrophy Capital Research. I'm Cory Johnson, Chief Market Strategist. Elastic is like the godfather of vectorization, which is kind of the key element to the way that generative AI and AI large language models are searched. So it's interesting to see these Q2 results from this company. Wall Street likes a beat or a miss, and this was better than estimates. In fact, they raised guidance for the coming quarter, and yet the market sold the stock off. So let's take a look a little bit deeper and see what was there or was to be seen. So like I said, strong quarter, 16% revenue growth. That's kind of where this company's been for the last year or two, between 15 and 20%, 16% this quarter. Pretty strong. It's a company that I follow really closely. We've had Ash Kulkarni, the CEO, on quite a bit. I'm going to see if we can talk to him next week as well. $425 million in revenues on a year-over-year basis. Again, really nice growth here for this company, driven by broad AI workload adoption, large cloud commitments from customers, including 5 deals over $10 million in total customer value, which is big for these guys. 20 above 20 million. Or sorry, 2 above 20 million, not 20 above 20 million, maybe someday. But look, enterprises are flocking to this company to manage their data and manage their own ability to understand what data they have, manage their security, and manage their observability. Those are the 3 things that these guys do. So nearing profitability, negative 2% EBIT margins, which means, of course, helps them out in the tax basis here, even as they generate free cash flow. When you think about the business overall, these guys sell subscriptions, very little in terms of services. The software is supposed to be installed and work, and we see that happening here without a big services bill for their customers. And when we look into that, so think of subscriptions for this as really the whole ballgame, the whole shoot and match for what they've got in terms of revenues. Their Agent Builder, really successful product for them, launching in a technical preview, they said, but their Elastic Inference Service, again, the ability to see what's in data and through a vector database, and now create agentic workflows. So manage that sort of vectorization process to create new outcomes using agents and AI-driven agents is a product that's it's an early adoption for them. But they say having AI agents that can work on unstructured data is a real game changer for them going forward here. And so that's why their subscription business just continues to crank on. Their security business also accelerating. They did an 8-figure XDR deal with a global chemical manufacturer. They talked about in the conference call about a $26 million commitment from a CISA for their next gen SIEM as a service business. So again, AI really driving their business and having their customers reevaluate their software needs and seeing the Elastic as a solution for them. And to me, the most important number that you can see here, we've been talking a lot lately about remaining performance obligations. That is, customers who say they're going to do a deal, that they've signed a deal, they can't put it into deferred revenues now, they can't put it into billings, but they're telling us it's an RPO, it's been booked. That's growing at 19%. So think about the business overall that was growing at 16%. The contracts are growing even faster than that. Their current RPOs, the number they've just started to give out the last few quarters, so I didn't create a chart for it. We don't have enough historical data to do that, but they said that was up 17% year over year, up to $971 million. So strong consumption across search, observability, and security, their 3 pillars of their business. Very impressive. And their RPOs are now growing faster than sales, as I said. Nonetheless, the market didn't really love these numbers. The stock sold off, I look at the numbers at the very last moment, down 12% in after-hours trading. And the stock that hasn't done much, down 7% for the year. So the numbers keep getting better, but the stock keeps selling off. That can't go on forever, in any case. Gen AI use cases expanding across their customer base. They said they've got 2,450 customers using Elastic for Gen AI. 370 of them are the big customers, the customers spending over $100,000 a year. And indeed, when you look at their big customer count, it is growing so much faster than the 2% growth of their total customers. So big customers growing at 13%. It shows that they're sort of get in the door and land and expand, right? Get in the door with small customers, grow that business really big is still the key to their success. In fact, if you look over the last 4 years, the big customer growth is at 93%, up to 1,600 this quarter, which really shows Ash Kulkarni, the CEO we've talked to and hope to talk to next week, the success he's having there. Here's what he had to say about how their customers are starting to use Gen AI, using their own data. That Elastic software is starting to search and use Gen AI to come up with their own solutions using Elastic, using their own data without going outside of that closed universe. Here's Ash Kulkarni.
As more and more companies start to deploy more and more of these kinds of applications, I would expect our penetration to grow. I would expect the breadth of revenue that we capture from each of these accounts to grow. In the cohort of AI users, we see them growing faster than the rest of the cohort. So that to us is a very important metric. We measure it, we track it. We are constantly looking to make sure that we win the AI workloads in every account. This is going to be something that we just keep working on. It's going to keep growing.
So we can see the steady success in the numbers, even if we don't see it in the stock at this moment. But it's one to keep an eye on here. Now, what's your big drill on earnings takeaway? What's the one thing you want to remember about this? Well, I have all that, and one number that means a whole lot. But first, subscribe to this podcast. Smash that follow button, whatever platform you're watching us on, whether it's YouTube or iTunes or Spotify, whatever. We really appreciate you following us. It's good for us to know, and we can know if you subscribe. All right, so Elastic Q2 earnings, 2026 earnings, Q2 for them. They're your big drill down earnings takeaway, and the one number that means a whole lot, the drill down earnings bite. Well, look, a great quarter for the company in terms of revenue, almost what's called $423 million, up 16% on a year-over-year basis. Strong, consistent growth from this company. But I think the one number that tells us the most, the drill down earnings bite, is $1,506,725,000 in remaining performance obligations. Remaining performance obligations, that is contracts for the future, are growing faster than revenues, suggesting good times to come from Elastic. Elastic beat numbers, whatever Wall Street wanted to beat my numbers as well, they raised their guidance for what they expect next quarter. And the market might not like these numbers in after hours trading, but I thought they looked pretty good. Thanks for checking out Drill Down Earnings. Check me out at X at Cory TV, and of course on Instagram, TikTok, and on YouTube at Drill Down Pod.